December 26, 2025. While the majority of the world was looking away, the silver market reached a significant technical and fundamental milestone. For the first time, silver has breached the $75 per ounce threshold. This isn't a projection, and this isn't a forecast. This is the observed market reality as of today. Spot silver surged 4.5% today, reaching approximately $75.20. That represents a year-to-date gain of roughly 161%. This isn't a future event. This is happening right now. The speed of these price movements is challenging traditional models and outperforming expectations. What we are witnessing is a significant market transformation that has been years in the making. In the next 13 minutes, I will show you exactly why the 2026 supply-demand imbalance has transitioned from a statistical model to a high-probability economic scenario. Pattern recognition is key to understanding this shift. To understand our current direction, we must examine the historical context. The performance we are seeing in 2025 represents silver's strongest annual showing since 1979. But this time, the drivers are fundamentally different. While gold has seen an impressive 72% gain this year, silver has significantly outpaced it, rising nearly 158% year-to-date. This isn't just a simple rally. This represents a structural realignment of a critical asset that many analysts believe has been undervalued for decades. Available information suggests a clear trend that the financial media is only just beginning to articulate. The era of cheap, abundant silver is transitioning into a new phase, and the market is finally pricing in the scarcity that industrial insiders have observed for years. But the price is only the symptom of a much deeper fundamental shift. The real story is hidden in the physical vaults. It is happening now. The analysis begins with the physical metal itself. We are moving beyond paper contracts and digital speculation into the realm of the actual bars and coins that facilitate global technological manufacturing. In China, acute physical tightness has reached such a level that the UBS SDIC Silver Futures Fund was recently forced to adjust its subscription rules for new investors. They simply cannot source the metal required to back the fund's growth at previous levels. This is the definition of a significant liquidity squeeze. Industry disclosures indicate a shift where the availability of physical bullion is becoming restricted in the public market. Not necessarily sold or exported, but strategically stockpiled. On the COMEX exchange, lease rates have hit historic highs as the cost to borrow silver spikes. This typically occurs when supply is so tight that owners are reluctant to lend their holdings. Available reports suggest an unprecedented liquidity squeeze that is beginning to affect the normal flow of trade. Analysts have noted tightening supply across every major exchange, even when full transparency isn't always available to retail observers. This isn't just a temporary volatility spike. The accessible reserves that once acted as a buffer for global demand have been significantly reduced. We are seeing a market where industrial buyers are competing for limited supply while sellers remain firm. This is how market dynamics shift toward a scarcity model. This is how the system recalibrates before the general public fully recognizes the scope of the issue. These moves are often unspoken by those who benefit from the existing status quo. If major institutional investors are facing market entry barriers because the metal isn't physically present, we must ask, where is the metal actually going in this environment? The answer lies in the industrial demand curve that is currently absorbing the majority of available silver. We have entered a new era of consumption where traditional mining output is struggling to keep pace. Record industrial consumption from AI data centers, solar PV technology, and the global shift to electric vehicles is creating a sustained demand vacuum. Silver is the most conductive element on Earth, and in the current technological revolution, it is often technically non-negotiable. Total demand in 2024 reached a massive 1.16 billion ounces, while mine production remained relatively flat at around 819 million ounces. What we are seeing is a massive structural deficit that cannot be quickly resolved by simply increasing mining activity. Available information paints a clear directional trend. The world is consuming silver faster than it is being extracted from the earth. This is the vacuum effect of the modern high-tech age. Every sophisticated AI chip, solar panel, and high-performance electronic component represents a one-way trip for the silver it contains. Unlike jewelry or coins, industrial silver is often consumed in tiny amounts per unit, making it difficult to recycle in significant volumes at current prices. This is the ghost inventory that analysts talk about but cannot physically locate. Experts have noted this tightening supply for years, but the scale of the current demand curve has surpassed previous forecasts. This isn't about fear, it's about pattern recognition. We are watching the global industrial base compete with the financial sector for a finite, depleting resource. When tech giants realize they cannot maintain production without this metal, price sensitivity often diminishes in favor of guaranteed delivery. They will prioritize securing supply to keep their assembly lines moving. But the question remains, can the mines simply produce more? The reality is technically much more complicated. The situation has now moved beyond simple economics and into the realm of strategic national interest. In 2025, the United States government made a policy move that changed the landscape. They officially designated silver as a critical mineral. This isn't just a bureaucratic label. It is a formal recognition that silver is essential to future infrastructure. But the US isn't the only player on the board. Industry disclosures indicate a shift in global strategy as China prepares to implement stricter silver export restrictions starting in 2026. Their goal appears clear: protect domestic supply for their own massive industrial expansion. This is the geopolitical realization of the silver scarcity. When a major producer decides to prioritize domestic consumption, the global market faces a significant supply shock. Stockpiling, export restrictions, and strategic controls are the tools being used by major powers to secure their technological future. You can verify this by examining the legislative changes and the shift in trade policy across both the Eastern and Western hemispheres. Available disclosures point in a single direction. The age of globalized abundance in the silver market is transitioning into an age of resource strategic planning. What we know today is enough to reveal the broader pattern. Major powers are no longer treating silver as a simple commodity. They are treating it as a strategic asset. For these entities, it's about industrial survival and technological dominance. While the market was once described as stable, the data now tells a different story. Even without full figures from private stockpiles, the trend is unmistakable. We are moving toward a world where physical possession of the metal is the primary factor. When a primary producer limits exports, the fundamental math changes for every nation starting right now. This is where the timeline appears to accelerate. We are no longer observing a slow, incremental climb. The data suggests a significant vertical shift. Major institutional analysts have now updated their projections to reflect this new structural reality. Some forecasts now suggest that silver could reach the $100 per ounce range as early as 2026. This isn't a random guess. It's based on the fact that 2025 marks the fifth consecutive year of a massive structural deficit. Since 2021, the world has faced a cumulative shortfall of nearly 820 million ounces. This deficit isn't just a number on a balance sheet. It is a physical reality that has reached a tipping point. The reserves are being drawn down, export doors are closing, and industrial machines require more metal than ever. That's when the market perception typically shifts. The gap between what the global economy requires and what is physically available is now too large to overlook. The 2026 shortage is a statistical high-probability event that is being priced into the market today. This is pattern recognition at its most fundamental level. The fallout from this shortage will likely reach far beyond the metals market itself. It is inherently linked to the broader shifts in the global financial system. In 2025, the US dollar index has seen a decline of over 8%, fueling what some call the debasement trade. Investors are increasingly looking toward hard assets as a hedge against currency volatility. This represents a global shift toward tangible value. With gold prices reaching record highs above $4,500, Many are looking for a relative value alternative and are finding it in silver. Investors are realizing that silver is not just an industrial metal, but a traditional form of wealth preservation. In this environment, an informed perspective is your best asset. Don't wait for lagging indicators from traditional media outlets. Available information paints a clear directional trend of currency devaluation and resource scarcity. The market is moving from paper derivatives toward physical reality. These trends are often unspoken until the momentum becomes impossible to ignore. As silver becomes harder to source and currencies fluctuate, the pressure on the price can become exponential. This is a moment where historical patterns appear to be repeating. Those who understand this structural realignment will be better positioned to navigate the changes. The clock is ticking on the current supply chain paradigm. It starts with the data we see today. So, what is the strategic approach in an environment where the fundamental rules have shifted? Analysts have noted a trend toward a buy-on-dips strategy as the market prepares for potential further appreciation, with silver price targets increasingly focused on the $90 to $100 range for 2026. Many experts view current volatility as a consolidation phase rather than a peak. Public reports have made one thing clear. Silver has been outperforming gold due to the extreme structural tightness in the physical market. Available information suggests that the current window for positioning may be narrowing as 2026 export policies loom. This is not financial advice. This is a data-driven analysis of the current market pattern. It is essential to look at the data and decide for yourself how to protect your interests. The evidence of the 5-year deficit and the critical mineral designation is a matter of public record. Industry disclosures indicate a shift in how wealth is being preserved in this era of uncertainty. Even without full transparency on every private transaction, the broader movement is evident. The trend is moving toward tangible assets with high industrial utility and limited supply. Don't wait for the headline news to tell you what the data is already showing. The 5-year deficit has transitioned from a theoretical model to a fundamental market floor. Historical precedent shows that when structural deficits in a critical asset hit a tipping point, prices do not simply correct. They often undergo a complete reset. We appear to be entering that reset phase now. The world is transitioning from a period of relative resource abundance to a period of strategic scarcity, and the silver market is a leading indicator of this shift. This isn't just a standard market cycle, it is a structural realignment of the global industrial economy. Verify this yourself by looking at industrial demand, falling exchange inventories, and the geopolitical moves to secure supply. The patterns are visible to anyone conducting the research. The primary question is no longer if there will be a supply challenge, but how the global economy will function as it intensifies. This is happening right now. Be prepared for the market reset that follows. The silver market is evolving faster than ever. If you want to track the 2026 shortage in real time and stay ahead of this structural shift, make sure to subscribe to the channel. We will continue to monitor the data and the geopolitical shifts as they unfold. Don't miss the next update.